All right, it looks like we're live. Welcome, everybody. Is this a very special edition of Top Trades? Is this a markets in turmoil edition of Top Trades? I don't know if we're there yet.
I was waiting for markets in turmoil yesterday. Just so everyone knows what that is the CNBC's put markets in turmoil, a special. Like I want to say it's like 18 times in the last 30 years, and every single time was the bottom. I was hoping for markets in turmoil.
Yep.
Not quite yet.
The greatest indicator of all time is markets in turmoil. You
It's
gotta
right there.
that happens. But we have had a very interesting week since we last chatted, Enrique. So I mean, to begin with, let's just go back to last Wednesday and set
Yeah.
the table, I guess. We had Trump come out and spook the market with much bigger than expected uh, tariffs. Futures started cratering almost immediately. The market didn't like it. We tumbled Thursday, and then again on Friday, just air pockets everywhere, everything going straight down. Um, and then yesterday, the market was so starved for anything positive, it ripped what the Nasdaq ripped. It did a 10% trip, right, from bottom to top almost, when the fake
Yeah.
headline came out that Trump was going to, or the White House was going to pause tariffs or the implementation of the new tariffs for 90 days. And then when that was proven false, when the White House said, no, that's not true, it went right back down to break even. But we
It's
did
like
finish the day even.
I want to say I thought I had read that it was like in 7 minutes it was $3.5 trillion of market cap or some crazy,
Yeah, no big deal.
crazy. What's that between friends? But
Mhm. So the situation has definitely changed. I mean, the way that I'm looking at this right now is I think the biggest issue maybe isn't the tariffs. The biggest issue is the lack of cohesive communication about the tariffs right now. Seems to be the problem. It feels as though different members of the administration are saying different things, and the market doesn't know who to believe. And so now the market has a big time trust issue with Trump and the tariffs and how this is all going to play out. How do you see this, or how do you see this reaction?
I'm going to have a slightly different but related take. Um, I don't know what the heck is going on or what the heck's going to happen, but I have a pretty clear view on the stock market at this point. And the funny thing is that the in the market, price equals truth. We often talk about this, and I've dealt a lot. I've always done very successfully in down markets. I've made money in every single down market. I did at Empire. I did in my hedge funds. And in some ways, down markets are easier than up markets. And we'll talk about that in a second. But I'll just tell you things that I know are truths, like things that I know I know. You know, the first question, and people watch the Maverick know this, is we ask ourselves, are we in an uptrend or a downtrend? There's a third phase of consolidation. We are no longer in an uptrend. That is something we know. Look at the 200-day moving average on the S&P 500. This isn't a debate. It's the yeah, but so that means that we're in a consolidation phase or a downtrend. We don't know yet. We honestly don't know. The second thing that cemented that, because everything changed on Wednesday, okay? Everything changed. I don't actually care why it changed. Like, to me, the fact that it was the Trump tariffs being greater, it doesn't really matter to me. Something like it didn't have to happen, but something else could have happened. The second piece that we got was what I call the volatility, the VIX bruise. Okay. And I'm going to tell you two things that are just absolute guarantees. Number one, we are no longer in an uptrend, and it will take us months to return to another uptrend. It's just mathematical fact, especially because number two, once the VIX has that kind of move, I use the example as, let's say you're a long distance runner, okay, and you get a really, you get I don't know, you get a Charlie horse, you get hit by something in your leg, you're still healthy, you're still going to be able to run marathons, but you're not doing any PRs for a couple months, right? And so I guess the question between a consolidation phase and a bear market is it that we sprained our ankle or did we get hit by a car, right? In all cases, the marathon runner, the US stock markets are eventually going to be great. They're going to be awesome. And for investing money, I would not do a darn thing here. Not a single thing. I just, nibble on and dollar cost average, etc.
Yeah.
But as a trader, the bull market is over. The uptrend is over. Now, we may enter into another one, a la COVID, 5 months later, which is probably that analogy, or we may enter into another one, 12 months later, 2022, 24 months later, 26, the global financial crisis. I just don't know, but I know it's over. And so what I would say is that the other thing to know is that in these markets, volatility is extreme once we get into the consolidation phase in the bear market. I don't know which one we're in. By the way, 15% of the time we're at a consolidation phase, and about 30% of those turn into bear phases. So it's basically 75, 15, 10 are the numbers of where the stock market exists in terms of phase. You just need to trade different. So, we talk about the Maverick. You have this a bit. We have it a lot more. We basically have like settings on the dial, and one is bull market, 2 is consolidation, and 3 is bear market. 2 and 3 actually look a lot more similar than does number 1. So, as much uncertainty as there is out there, I actually think in the stock market, there's a lot more certainty, because I'll tell you the 2 things I'm certain about in the stock market: that it's going to take months and months to get to new highs. Okay. And that eventually the stock market's going much higher. Like I'll show you, I've got in the Maverick tomorrow, we've got all kinds of charts, etc. But you just have to trade different. So, and I'll leave with this one last part and then we'll can open it up. I think that you got to use strength to pare down positions. You have to take some losses that maybe you don't want to take. And we're going to be doing this in the Maverick through the next 10, 15 days. And then you want to be lean and mean, because as a trader, these can be the best markets. Like you're going to get today where we've got kind of this minuscule bounce. But when we have these nasty markets, you go down 12% in 4 days, you're going to have an up 6 in the S&P 500. It's a guarantee every single time. Global financial crisis, internet, every single one. They always look the same. And so you just want to, if you got 20 positions right now, use strength, and there's not very much today, but use strength to pare it down to 5. Take some losses that you might not otherwise take, but then use cash as your pivot point, right? With the VIX at 40 or 50, you should have little cash. That's actually right now. When the VIX gets down 30% below that, you should have a lot of cash. It's used short term. This will actually be a great trader's market. So everything changed for the first time on Wednesday, probably since the first time. October 2023 kind of flirted with here, but didn't really. It was actually, this goes back to 2022. This is more like February, April of 2022 in COVID, because 23 you didn't get you didn't get that flush, that thrust, that VIX, that bruise. Everything's different. There's a plan. It's still related to the bull market plan. It's a lot more like the bear market plan. Pair positions, use strength, use cash as your pivot, and be aggressive, believe it or not. Because once you're sitting in 70% cash, it's real easy to be aggressive when the market goes down 10% in 2 days. It's actually easy because you're just like, bring it. So it's a bummer about, that we moved into this phase, but it happens. It happens once every 2, 3, 4, 5 years. And now, but there's a plan, and there's a great plan. And, you just have to be focused on executing it.
Yeah. Just a quick thought exercise for you. I kind of want to pick your brain about this. And for those of you who don't know, Enrique and I purposely don't try to talk about this stuff until we do this. We do this live show for you because I want to get raw thoughts about how everything goes down and it to be unrehearsed. A little thought exercise for you. Let's say that this whole tariff situation quickly begins to resolve and things start looking a lot better. Do you think that we're going to get a massive relief rally in that case? And do you think even that rally will fail and we're going to be in either a wide choppy range or we're just going to go right back down afterward?
I have a couple thoughts, and I just want to address one thing that was on the chat. I didn't say we were in a downtrend.
Mm-hmm.
I said we're not in an uptrend. There's a very big difference. Okay, so that's key because now we're in the chop. I just don't see, and I've never seen in my entire career, and I'm looking at my charts when I'm doing this, how you do this sort of damage with, the damage to confidence and all that,
Mm-hmm.
and how you truly V out of it to new heights. Again, let's take COVID, which in some ways has some similarities because COVID wasn't a event that we chose to have happen, but we chose how we responded to it. And that certainly had an impact. And in COVID, if I make the analogy that we are either we're either at the beginning of March or the end of March, so we're either halfway to the bottom or we're at the bottom. COVID, you didn't revisit new highs until August of 2020, April, May, June, July, August, 4 months. And that's the best case scenario.
Yeah.
Because I think in some ways, we could say that Trump could just wake up tomorrow and undo all this stuff. And then it kind of has a COVID-like aspect to it because we could have, we didn't, by the way, but we could have just said, hey, we're gonna stop all the shutdowns. But even then, we didn't really know what COVID was going to happen. I remember graphing COVID charts of like looking at different geographies and the mortality numbers and all this stuff for 6 months. And that's sort of because that unknown, even if Trump is just negotiating a new deal, there's going to be heightened uncertainty for an extended period of time. So I think your best case scenario is, COVID. Your middle case scenario is something that looks a little bit more like 2022, where it took, a little bit longer to get back through it. And your worst case scenario is, something that looks like the GFC. And the problem is he's being very aggressive.
Yeah.
I don't know that that's a problem. And I'll come back to this in a second. When I say problem, it's not a moral statement. What he's doing may or may not be the right thing for America. I don't care as a trader,
right?
Or as an intermediate term investor. I just have to admit that if he continues down his course, the chance for a material economic dislocation is high. Now, let's just talk about 2022 for a second, because 2022, when I give that analogy, remember what we were talking about the other day is the market kind of crumbled off of the back of 2021. We had very high valuations. We had a lot of silliness out there. And then we got the Russia-Ukraine war, which acted as a exogenous shock that kind of pushed us from a consolidation into a downtrend. I don't know. Like this is so these are the two analogies that I think really are most important. There's COVID and there's 2022. I don't care. Like my plan, which is we're going to use strength, get rid of 2/3 of positions, maybe all of them, and then just trade extremes, would have worked in 2020. It would have ended up leaving a little bit of money on the table, but not a lot. And it would have worked in 22. Because, by the way, it did work both those times. So I guess that's kind of the point is like, I have a lot more certainty now. I just know we're not an uptrend. I know we're going to have big down days. We're going to have big bounces. I kind of don't care what Trump does because we're set up to make money either way. Eventually it's going to take a couple more moves. But I don't know. Anyone who says they do know, it's impossible to know. But you do know how to trade it, believe it or not.
Yeah, I think that this is the type of market where if you're not used to trading these conditions, you have to be a lot quicker and realize that you're not going to be able to ride. I mean, assuming that you're long only, you're not going to be able to ride these snapback rallies as far as you might think. You have to be aggressive in taking profits. But even in situations where it feels like you're in free fall, like on Monday was a pretty good indication that we're going to get some type of bounce early this week. We're so far oversold.
We always do. So I wrote in Truth and Trends on Thursday, actually a piece that I'm super proud of because I had this in my head for years. We got the VIX above 40. We got the put call above 1. We got the NASDAQ new highs, new lows just breached over, got better yesterday. What was my third indicator? I had basically 4 horsemen. So, I'm going to tell you. So in an ideal world, this is what I would do if you're in this kind of market. Okay. This is going to sound extreme. Don't go to cash just now because we're going to have big bounces here. But at some point with your trading account in the next 2 weeks, 3 weeks, you should be mostly cash. Okay. 60, 70, 80, maybe even 100%. And then what you do is this. Every day the market goes down 3% or more, you buy 1/5 of that or 1/8 of that cash holding. Mm-hmm. And then every day the market goes up 3% or more, you sell that. And that will work. The crazy thing is you'd say, well, why wouldn't I always do that? Well, because we don't have 3% up and down moves in most markets. Right. But to me, when you're getting down 5, down 5, down 5, now I know we're going to bounce. Because we going back to the 1930s, we bounced. So, just if I'm giving the best advice I could to people, take your book right now. And let's say you should always have an allocation in your head. This is my kitty, right? This is what I'm playing with. Let's call it $100, $100, 100 points. I would be more invested than not right now trading. This is all trading. But as we see these bounces, especially towards 5,400, 5,500 in the S&P, I would get that to majority cash. And then what I would do is, unlike before where we were selling positions and then swapping out to another position, I'm not going to do that. I'm just going to go to cash. And so once I reset sometime in the next 10 to 15 days, my world's simple. Whatever my cash holding is, market goes down 3, I buy 1/5, 1/8 of that cash holding. And when the market bounces 3, I sell 1/8, and you can play this like a fiddle. And what happens is you can watch things like the put call, you can watch things like the VIX, you can watch, all these variables. And when everyone's freaked out, you're like, yeah, let's bring it. Oh, I got this. And that's literally how I was looking at, especially Friday and then yesterday. I was like, I love this because these kinds of markets, it's 2 10s against a deal of 4. You just know it's going to bounce. But the final piece of that, the sell high is more important than the buy low, because what you don't want to do is you then get a 7, 8, 10, 12, 20% bounce in something in 2 days. And you're like, oh no, now the recovery's in. Right. And then if we tip over into 2022, you end up with a 30% loss because you didn't take the profit. You make 17% in 2 days. Take some profits. It's pretty simple.
Yeah, I mean, that's kind of how I think about it too. And especially when we have these big shocks and everybody's on one side of the boat. Like I took a quick trade in Nike late last week because literally the worst of the worst right here. You have a stock that couldn't get its act together over the past several years. Management made some poor choices and the business has been not great for a while now. And then just add on the whole tariff news and the big gap lower. It was like, okay, how could things possibly get worse for a company like this in the short term, and see if I can play some type of a bounce? I didn't get the huge bounce that I wanted to, and we closed out this position earlier today for a modest gain. But at the same time, taking shots like this in a market like this, when you're at these extremes, I find that to be really effective. Just who wanted to buy Nike and who was like, oh, I'm really bullish on Nike after this crazy tariff news was announced right here. So just playing the opposite side of the crowd.
Play the extremes. Someone just asked me what a TQQQ. I am 100% of my portfolio is in TQQQ right now, fully invested, just so you know. Because someone asked that. And what I'm going to do, the difference now between my TQQQ position, when I first started buying TQQQ at, I think my cost is, here, I'll share this with folks. Let me just pull up, because I was sharing this with a buddy. Right. My cost is 58 on TQQQ. On one chunk of it. My cost is probably about $56. And when I first started buying it, I was buying it in the 60s because I was playing that we were in an uptrend and that we would go back to the uptrend. Right. And I'm telling you, on Wednesday, that switched. And now what I'm going to do is I'm going to be selling my TQQQ with a 5 handle, maybe some of it with a 6 handle. booking maybe a loss, maybe a profit, not very much, probably break even, and I'm resetting into trading it again, just like I did in 2022. So right now, you want to actually have risk on. I'm just saying that the activity levels need to be dialed up. And again, this isn't, if you're an investor, okay, don't do any of this. We're talking about generating absolute return and opportunity about the market that exists. And this is one of the better markets for trading. Okay. I might even go so far to say the best type of market for trading, but you have to be active. You got to be totally willing to be 100% invested one day and 50% invested the next. Because if you're not, you're going to get chewed up.
Yeah. Yeah, and that's tough for some people to wrap their minds around, I think, because your natural instinct during periods of this is to just stop and stare because everything's moving so quickly around you.
Well, there's something funny about that because on for the most part on Thursday and Friday, that was actually the right move, believe it or not. Like once Thursday and Friday went like they did, it was just go away. Yeah. And then wait until, and I published this on Thursday, it was the NYSE up down volume was my third one, which we wanted to see 90, and we got, we got like 90% down volume. We got like 97. I mean, it just got crazy. So you kind of wanted to see the whites of their eyes.
Yeah.
In terms of the market, and then you can begin to nibble a little bit on Friday and a little bit yesterday. And even now, I just would be patient, but we're waiting to reposition. And that's also hard for people to understand that, like, I've given up on my TQQQ position. If in the next 3 to 6 months, I do not believe I'll actually make money or make very much money. And I'm great with that. Now's not the time to sell because I think I'm going to claw a lot of that back and then set up for the next trade. But we have to give up. There were a bunch of positions that we had on before Wednesday that we're not going to make money on. That doesn't mean you sell them here because they can still go up 20% from here and you're still going to be down. But this is the shift. The world changed. Okay. Price told us price equals truth. Look how far we are below the 200-day. Pull up that chart of the VIX. Like, I don't know if you pulled that up yet.
Yeah, I had it up earlier. Boom.
I mean, and go back to 1995, man. I mean,
1995.
Yeah, you're going to be but you're going to be surprised. No, if you can pull it all up in one chart.
No, it's all
but what I was going to say is you're going to be surprised. I mean, we hit crazy levels. So in the next 10 to 15 days, we bounce from here. We'll be at 5,400, 5,500, 5,600, 50, somewhere around there on the S&P. And you use it to reposition and get ready for the new game. This is, we were playing football. We were playing an NFL match in a nice sunny day. And now we're playing in a pretty, reasonable rainstorm. The question is, are we playing in a blizzard? Right. That I don't know yet, but we might be, but I'm going to know, I'll know more in 30 days because either the market's going to recover and go, get back to those moving averages and begin to play with them again, or it's not.
Right.
And this is the nice thing. Price equals truth.
Yeah, that's what I like to talk about, how the relief rally can tell us a lot more than the drop. Just how strong the market is after a big move like this can tell you a lot about the resilience of how investors are feeling. Like, we were talking about this earlier, just briefly before we hopped on, but we have these air pockets now in the S&P right here. And you were saying what? You're thinking getting back to 3,400-ish, this area right here.
Yeah, I'm looking which 5,400 to 5,500.
Yes.
But right, you also need to think in how would I explain this? You need to think in chunks of time. So 10 to 15 day periods. So what I just don't know is this, and let's go back because it was instructive when we just did it. Let's go back to 2022 briefly.
On the S&P?
Yeah. And look at what happened in 2022. I just don't know whether we are, look at about May 6th, or even, or maybe May 10th. That's actually a good example. We're somewhere May 6th to May 10th, where we got, down and then we bounced. It very well could be that. So you need to be quick on sort of repositioning. But just, but again, I want to say something here. Just be patient too, in the sense that if you're investing, you're not doing anything. If you're trading, take advantage of any strength and be willing to sell at losses. And then just slowly begin to, I'd almost say this, is that with the S&P, as the S&P bounces 5, pull off 20% of your positions no matter what. That's actually a good rule. Like, I think that with the S&P up 5% from whatever the lowest close is, which we're not there. We were almost there this morning. Pull off 20% of your positions. And if it goes up another 5, pull off another 20%. Like that kind of discipline where you're just saying, I'm just going to do this. This is where we have to switch now. This is a different market. It's a different animal. And, but again, I'll tell you, the funny thing is, it's not hard to trade it. It makes it easier. When the market goes down 5% a day for 3 days in a row, I know to buy it. And it's going to be higher within 10 to 15 days. Every time. Forever.
Yeah. And it's going to move. It's definitely going to move. You're not going to have weeks and weeks where it's not doing anything.
Yeah, I wrote on. Someone wrote that quote from Lenin that sometimes it takes decades for something, decades for something to happen, but that sometimes decades happen in days or weeks, something like that.
Yeah,
I messed it up. I basically wrote the version. I'm like, sometimes the stock market does, it takes a decade to do a return, and sometimes it does that return in a day. A decade of returns in a day, which is basically what it did yesterday. So, but yeah, I can't emphasize enough that not today, although maybe a little bit today, get to more cash in your trading book and turn things around. Because I think a lot of people might be sitting on, I'm just going to use these 20 positions. You're sitting on 20 positions and they're probably almost all losers, these are trading, not investing. And they're probably all losers, or a lot of them are. And then when the market goes down more, you don't want to sell them. The market goes up, you're not back up. There's this like losing psychology that will just get you. And then when the market goes, you wake up and you get up at 5 a.m, you're like, oh, futures are a little bit down again. When's it going to stop? When's it going to stop? Well, when it bounces 5% or 10%, sell half your positions, then half of it stopped.
Mm-hmm. Yeah.
By definition. We can argue about whether cash is a good long-term investment, but I'll tell you what, cash ain't going down when the market goes down 10%, if it happens next week. So it's just about intelligent repositioning and, and having a plan. So again, the plan, take what you got on strength, bring it down, and then wait to buy again on extreme weakness. RSI, we got in the S&P, this one was crazy. We got an RSI on the S&P of, pull this up, 23.
Yeah, I was gonna say it was 23 or 24. Yeah, it was down there.
I mean, that's just nuts.
Yeah.
So you want to be a better buyer for the next 10 to 15 days. That doesn't mean it can't go lower in the next day or 2 or 3. But, those are the kinds of things that you want to be a participant in and trade actively. And I'll get back to, so if someone's asking for the investment portfolio, like for money that you're going to hold 5 years, not even 10, I just do nothing. I absolutely am not a seller here. And, there could be a situation where when all the Trump stuff works itself out, there's things that maybe you go, oh, now this position is impaired because of the way the world changed.
Right.
I'm going to be surprised that happened. But I look, long-term money, I'm a buyer here. Actually, I'm saying both I'm a buyer. I'm just saying that I'm actually not thinking very much about what I'm doing right now. I'm thinking about what I'm doing on the next move.
Yeah. Yeah. And honestly, like, I know a lot of this feels really bad, and we look at a lot of these broken charts out there. I'm at the point now where I'm also making notes of the names that are holding on a lot better than the broad market, because there are names out there that are still bouncing at their 200-day moving average that aren't, like this red line here. This is the S&P. We broke the 200-day in early March, perfectly, almost to a T, retested it right there, and then straight down. Well, there are stocks out there that look pretty darn good, after pulling back. And I try to make a note of those, and then those are
Look,
potentially your new market leaders when things turn
look,
around.
and sometimes they don't even have to be. Look at talent, TLN, which we've talked about a ton, holding that 200-day real nicely.
Yeah.
You
Yeah.
know, because they've got a big old buyback because all their cash flow is locked in, you know. But I'm just gonna say something right now. Like I like that approach. I like that, getting your buy list. Okay. I might do it a little bit differently. Like I would actually in that mental place, I wouldn't just look at what's holding in well, because there's a little bit of a danger that you're gonna buy stuff that's too defensive.
Sure.
And that when we recover, it's not going to be the leaders. It's just leading right now. So I would have a little bit of a more of a fundamental framework around that. But I'm going to tell you, and we both use a lot of technicals and all that. I'm the least fundamental and technical that I will ever be in this kind of environment. It's just all price and trading. Everything's crypto at this point, right? When you're trading with this kind of volatility, all the stocks turn into cryptocurrencies, and you're just trading the charts. You know, I not exactly, but like you want to have that dial, and price equals truth. Don't argue with price in the short term. So, you know, you got to listen to that. But I like that. I mean, you know, one of the things we were talking about, Hood. Like, I mean, these are things. I will say this.
That's one that's on my list. Absolutely.
You want things that are going to bounce. I guarantee you that Talon, you know, with that chart, because it's a great fundamental story. On a bounce, it's going to have real sustainability. Hood is another one that I really like there. I mean, this is crazy to say, but, you know, relative strength, go look at, I mean, this one's nuts. Go look at, you know, Palantir.
That's another one that's on my list, actually, because look at how it's not even anywhere close. It's above its 50-day or 100-day.
100-day, yeah.
I mean,
this still has a rising 50, 100-day, you know. So what would I do today? Okay, so let's just cut down to this. So if you're an investor, 5-year plus money, chill out, be cool. If you have more money that you could put in that, put a little bit in. That's what I would do as an investor.
Yeah.
As a trader, if you have a lot on right now, believe it or not, I would also be patient for the next 3 to 10 trading days, with the idea that you're going to layer off 10 to 70%, depending on the strength that we see in the bounce that happens. If you have $100 that you would invest and you're only 10 or 20, take some shots, buy some stuff. This is a great environment to take some individual shots. I like using leveraged ETFs in this kind of stuff. I mean, obviously TQQQ, because we started in that other environment, but things like Soxel, you know, and you can do it with your options. Soxel's triple leveraged SOX, the semiconductor index. When this bounces, you know, when this market gets this bounce, this is going to bounce 20, 30%. You know, we did it. I'm just going to, you know, I'm going to mention it here, which I don't know if I should, but because we gave it for the Maverick, we mentioned this thing called SVIX, SVIX, which is the inverse VIX, which is just like, I don't know, like it's a guarantee that the VIX is going lower, you know, just by its very nature. So, you know, I think you can take these leverage bets and you're dealing with a lot higher probability.
Yeah. We got a question here about Uber, since that's one of my trades that I have on right now. So I want to just briefly talk about how I would manage something like this. So obviously we got caught last week in that brutal downturn right there. We were down, what, 6 and some change. On Thursday, we were down 7-ish. On Friday, yes, it did bounce a little bit after, you know, getting raked over the coals early Monday morning with everything else. And it's bouncing a little bit today. I'm not super impressed with the bounce. I'm probably going to be looking to cut our losses at some point in this area, assuming that it doesn't just turn south immediately right here, because this is a broken trade. I mean, like everything else, I think it's holding up a lot better than some other stuff, but for our time frame and with earnings approaching, you know, I'm just going to take what I can get off the bounce on this thing and then just run away with whatever I have left.
I love what you just said there. And one of the things you said in particular, it's a broken trade. The market is a broken, you know, the bull market's broken.
Yeah.
You know, and so you've just got to adjust. You know, earnings don't matter. That's one other question I've had from people. People are like, well, how are, you know, what about earnings? I go, just think it through. our companies have more visibility than we do. So
Yeah.
what are they going to say? They're really not going to say very much. They're going to report what happened. They're going to report what's happening, and they're going to say, we don't know. Now, I don't know. With the VIX at 50, that might be a good thing. It very well could be a good thing, but I just don't know. I just want to ask one question. Someone was asking about the SVIX being lower with the VIX being lower. There's usually a couple days delay with those things. Like it's always quirky with those ETFs that play off the VIX. You kind of want to look at 3 to 5 day trading periods because of the way they calculate it. But
All right, and I said I would talk about Roblox too, which is our other one. I actually like this stock just fine here. I mean, this is one of those names where it's a little bit stronger than the rest of the market. It managed to bounce off its 200-day. Kind of a weak bounce today here. Still a broken trade for us in the short term with our options. So I'm looking to get rid of this thing on any type of meaningful bounce if it will give us a meaningful bounce here. But as a stock only play, I'm interested to see how it develops here and how it holds. I mean, this could very easily get sucked down the tubes with the rest of the market if we, stumble lower from here. But at the same time, it is holding up a lot better. And I love this big base on it. I've talked about that a lot.
It reminds me of Hood a lot, very similar chart at this point. But it's funny is like as we're talking through this, and I do think there's big differences in the stocks, and I want to talk about IWM here in a second. This is a market that all stocks are kind of just plays on the market.
Yeah.
Like there's a handful of stocks that aren't, but everything else is just your relationship to what's going to happen to the tape. And so, a lot of the fundamental stuff, this is what I was saying, it kind of just gets thrown out. So I like these relative charts like Roblox, like Hood, like Talon's, a beast. Someone asked about IWM. I mean, IWM, the most positive thing I can say is it's the worst house on the block. The problem that I have, and could it be at 200 in a day? Absolutely. But if you gave me the choice of buying the SOX, the semiconductor index, or SOXL, the leverage version, I'd much rather buy that than IWM. My big problem with the Russell 2000 is these are subscale companies that are more exposed to interest rates and commodities and everything else in life. So there's a reason why the Russell 2000 has lagged for 10 years. Because it kind of sucks. Like, I'd rather, I got stuff that's down, that's awesome. I'd rather go out and buy the Mag 7 than I would the Russell 2000.
Yeah. Yeah.
Because those companies have great balance sheets, and right now you want to buy the Russell 2000 when the Mag 7 is at 52-week highs and you can't find anything to buy and they're trading at a PE of 40. That's when you want to buy the Russell 2000. when they're trading at a PE of 20, and down 22% or whatever it is, you want to buy high quality. That's the other thing too. I will say this, one other lesson, and we're doing this with my trading software. We look at this 15-point scoring system, and then we usually look at an RSI of 30. We just switched it yesterday. So we're only doing 14s and 15s. We usually look at 12s, 13s, 14s, and 15s. And we're now looking for an RSI entry point of 25 and then back above 30. My point is you can upgrade. You can buy the best companies in the world that are just as oversold as some mediocre companies. And then if the market rallies, look, eventually it's going to go to quality, because quality will also be what survives whatever happens with the tariffs.
Yeah. I thought that was a very good point you made earlier too, about what we call in the technical world a high correlation market. If you're in a bull market, there's going to be stocks that do okay with the averages. There's going to be stocks that outperform. There's going to be stocks that lag. When the market turns like this, and you can tell on a day like this, everything was down the same yesterday and rallied the same time, and everything's green, and basically up the same amount. You're going to have a few outliers here, but the market's going to move all together.
When volatility steps above 30 or 40 on the VIX, all correlations go to 1 or a leveraged 1, meaning that like when we sell off 10%, the VIX goes to 40, everything's going down. It's just a matter of how much it's going to go down. So, but I can't emphasize enough, because I just want everyone, go take your portfolio today put them all on the screen, pull them into investing, well, we're just going to throw over here, and pull them into trading. And then go into the trading. I don't want you to look at what your gain or loss is in it. We don't care. And then, if the trading book is, again, what's your $100? I would go into that. And then as we bounce, go take off 2, 3, 4, 5, 10 of those names and just have a plan. Put levels down. This is actually important too. I would go in and write levels where you would take those positions off on a bounce, based on the chart, the 200-day, all these other things, and just have a plan. And that's going to make life so much easier that when the crazy happens, you're just gonna be, oh, well, I said I'd sell it at 32. I'm selling it at 32, and stick to it. But I think that's this is the time to do that. And it's a target rich environment.
Yeah. Oh, someone's asking about SVIX.
Well, SVIX is the inverse VIX, which I was saying before. Even though the VIX is down, it's down a little bit. Those things trade in like 3 to 5 day chunks. But look at that SVIX chart, by the way.
Yeah.
I'll pull it up real quick.
Yep.
It screams 16, 17, 18. We could be there in a day.
Yeah. Yeah.
Close that gap.
The VIX reverts. That's what it does.
It's the VIX reverse. It's the VIX reverse.
Yeah.
Which is a bet that it's a bet that I like.
So something else I've been thinking about in this market right here is crypto and where its spot is in all of this. So Bitcoin has been very interesting. When we have the shit coins and all the other junk getting hit last week, Bitcoin was relatively stable and didn't do much on Thursday, Friday, and it wasn't until Sunday night, which is, I guess, kind of characteristic of Bitcoin. It likes to dance around on Sundays, but it didn't.
That's also because no one could trade the market on the freak out over the weekend, but they could trade Bitcoin. So that to me is just like logistics.
But Bitcoin is holding up really well compared to the market and compared to other crypto. And I'm kind of wondering if this is going to be a bigger change in character for it, and if it's part of the maturation process of what the Bitcoin trade really is, because for so long, Bitcoin has been a tech growth trade and it's held hands with those stocks, and now it's not. And this is a relatively new situation for it. And I wonder if that can continue or if something else is going on, or if this is just some sort of anomaly. We're going to go right back to it being heavily correlated with the tech trade.
Yeah, I don't know. I agree with you. Bitcoin acts great, relative to everything else. I mean, that's one of the better looking. But it's funny, as much as we say everything's moving with the market, which it is, even in this move, there've been relative outperformers, because we just went through a chart of like 3 of the most speculative stocks on the planet: Roblox, Palantir, and Hood. Yeah. And they all look great. And the best one is Palantir, that trades at 743 times earnings. So, that tells you that there are other dynamics in there. I like those. I like those because, part of that's leadership that existed before, but look, Bitcoin gave up leadership months ago. Yeah. It had been lagging for a while. So I could see also on a risk reversal, like Bitcoin really moving back up. So no, I think it's a great, and what's gold done so far? Let me pull that up.
Gold's sitting right at 3,000 right now, spot gold. Just hanging out. I mean, we've had, obviously, it was sold with everything else on.
Yeah. Okay. Honestly, we talked about this last. Sorry to interrupt you. We talked about this last Wednesday. We talked about gold before the Trump stuff, and exactly what I said is it's going back to the 50-day moving average, because ultimately it's a risk asset to go up, and that's precisely what it did.
Yeah, absolutely. And silver got hammered. Silver was absolutely dogged on the Trump stuff, because obviously, it's not as much of a safe haven as a gold trade would even be. So that was interesting too. But yeah, I am kind of curious as to, just going back to crypto, as to whether or not this change of character is going to continue, or if it's just going to revert right back to, getting sold. It's just sort of hanging out at this point. I think both are entirely possible right there. but we haven't seen the big swings in Bitcoin that we would normally see.
I agree. You know what I'm interested to do? I want to look back and see what happened in that 22 bear market, because that's really the models that I think we have to look at.
With Bitcoin, or
well, yeah, I'm looking at Bitcoin. So interestingly enough, in the 22 bear market, Bitcoin got below those moving averages much quicker. You know, Bitcoin had hit 70, almost 70,000 in November, got well below those moving averages, and then stayed below them. I think it's a really interesting hypothesis. I think, and it makes a lot of sense. You just have a lot more institutional holding, you know, and it's outperforming so far. U.S. equity markets are, but you know, we also, and Bitcoin was fairly crowded. We also, I'll come back to, because I am talking about things in a different way than I normally do, but still those grand rules of physics apply. One of the reasons the US stock market's down so much is because the US stock market was up so much relative to everything else. And one of the reasons why the correction's so nasty is because the upside was so awesome relative to everything else. There's symmetry. My only point is that those symmetry rules are now kind of on the back burner after we have that swoosh down, as well as those volatility. We just got to switch our, you know, it's raining out. It was sunny before, and maybe I'd have a thunderstorm rolling through, and that's how I could live my life. Well, now it's raining. I'm getting wet. If I'm not with the jacket umbrella, I'm getting soaked, you know. And what we don't know, but we'll know, and we're actually going to know in a month. I'll tell you, it is definitive that in 45 days, we're going to know whether we're going into another bear market. It's just too early to call right now. Now, you could say that's because of whatever Trump's going to say, you know, and I will say, like COVID, there's a little bit of an element of that, but I think it's just kind of the market's going to do what it's going to do, and you have to have a plan that's kind of prepared for it. So, but I can't emphasize enough in these bear markets. If you, part of me, this is drastic, and I wouldn't say for people to do this on your trading accounts. Part of me just says to people, and it's not the right move, but there's a logic to it. Just go everything to cash and then start tomorrow from new on your trading account.
Yeah.
And then if the market sells off 6% tomorrow, you're literally going to be hopping down the street being like, oh yeah, here we go. Like, you know, I'm getting all these great technical signals, all that. It's just all about mentality. My hedge funds, when we made money in 98, we made money in 2001, 2002, we made money in 08, 09. What it actually was for us, it wasn't that we made so much money when the market went down. It's that we didn't lose money. And then we just waited for it to get crazier and crazier. And we just bought a little bit more, bought a little bit more, bought a little bit more. And then when it bounced, we were just like, okay, let's take some of these. It's a counter-punching market, because I will say this. Some people, and Patrick, I know you've got great, you know, option strategies, but some people will try to chase this with puts and other, like, you know, take advantage of the downside. Wrong move. Are very, very difficult. Much more difficult to do than what I'm saying.
It's very hard.
Because the problem is you're going to see 6 days where the market's down 12%, going down every day, and you're going to see 1 day where it's up 9%.
Yeah.
That's how this market trades. And so I just think, but clear your psychology and turn volatility into your friend, not your enemy. I think is probably the biggest message I could have here.
Well, that's what you're so good at. You've been doing this for so long, and I think this is the most important stuff we can talk about. Yeah. On a week like this, where it's like, if you can get your mindset right, like you said, and you can be in cash, and you can get a sober look at what's happening in this market, instead of like having your hand on your head while you're watching your holdings dwindle in this, you're gonna have a much better chance at picking off those spots and being able to ride those counterpunch rallies, like you like to call them. And also, like, just seeing you be able to change your mind in real time like this, I think is really valuable for all of us, because it's very difficult to have these strong opinions in the market and then have something move against you and then be like, okay, that's done. We're doing something totally different now. And I think that's a real skill that people have to learn.
So the best traders, and I won't put myself amongst the best traders. I'm okay to pretty good, but the best traders you have a plan, you've got conviction in that plan because that's a plan that you've put out for, that you've built over decades and it works. But you also know that that plan changes according to the market. You also have that conviction. And, our strategy is in a bull market, we buy down, we buy down, we buy down, we buy down. But then I have a switch that says, okay, I'm no longer in a bull market. I'm in a consolidation or downtrend. And now we're going to reposition, because that's what will prevent us from getting taken down if this turns out, because if this turns into a bear market like 2022, there's a lot more downside.
Yeah.
And we're much more likely to go into a bear market today than we were last Wednesday midday.
Yes.
That is also a statement of fact.
Yep.
Probability of recession and bear market. I don't know if it went up by 50% or 100%. Not that it's going to 100%. I'm just saying it went up. If it was 20% on Wednesday at 3:59, it is 40% today. Whatever, pick your number. So I go to the weather. None of us goes out there. Go to my dumb football analogy. You got a game plan for a football team that if the weather's good, you're going to do one thing. And if it's raining, you're going to do another. And if it's snowing, you're going to do another. That's just common sense. And then you don't go out and say, well, I know it looks like it's snowing, but this should really be summer. So I'm going to stick with the summer plan. No, that would be dumb. You have to admit, you got to acknowledge the weather that's outside. And now we are in, consolidation phase and a period of violence. And you need a position for it, and then put yourself in a position to take advantage of it.
A period of violence. That sounds terrifying. But yes,
it is. It's mental violence. Losing money is your body reacts the same way to your fear of death or being injured when you're losing money. The chemicals that go through your brain, it's literally physiologically the same reaction.
Yeah,
and,
that fight or flight.
You need to have respect for it, and you need to figure out. Just the same way they teach in the military, they teach them how to deal with that, and I won't go through how they teach that, but it's a lot of compartmentalization and a lot of take the one piece at a time, et cetera. The game plan's the same here.
Yeah. So as I think about how I'm going to view the markets, and I'll just use the S&P as just the one thing we can talk about here is our broad roadmap going forward. I'm looking to see how today's bounce resolves. It's fading right here.
That kind of stinks.
Yeah, it does kind of stink. The fact that we can't really even stay up near those highs is a little bit disconcerting here. And then moving in toward the end of the week, let's say that we get some headline relief. I guess I'll call it that. And we get above, and we get into this gap right here, somewhere between 5290 and 5400 right here. Right. I'm going to look to be a seller at that point, and then pull back a little bit and see where we go from there. What do you think of that as just a broad roadmap going forward?
No, I think it's a great roadmap. I think let's just look. How would I say this? So we're at 5163 right now. If we went up, let's just do this math. I did it before. 5163, 1.03 times. Hold on a second. 1.03.
That's 4.5% to 5,400.
Yeah, so it's 5,300 is 3% up. 5,450 is another 3% up.
Yep.
And 5,600 is another 3% up. Yeah. Every 3% up from here, I want to be a bit of a seller. I'm probably more the second and third 3%, not this one. And by the way, I'm going to tell you, and we're not going to do a lot because we're dealing with this transition stage. If we're down 5% tomorrow, I'm going to buy something.
Yeah.
I want to fade 3 to 5. I want to fade 3 to 5s, and I want to buy down 5s, maybe down 4s.
Okay. Yeah. Yeah. I like
that's
that.
That's actually a good rule of thumb as you kind of just go through this. I'm actually going to put that, so down 4s are rare, man. So I don't know, we'll use the rule of 3.5 right now.
Okay.
I think every down 3.5, you want to buy a little bit in your trading account, and every up 3.5, you want to sell a little bit more than a little bit.
I like that. I'm writing that
How I
down
would.
in my Enrique diaries right here of things we
And
can go
so
back and
in the NASDAQ, that 3.5 will be 5. That means on T triple Q it's 10 or 15.
right.
So but I like indexing to the S&P. Yeah, it's the rule of 3.5. Buy a little down 3.5, every down 3.5, sell a little bit more than a little every up 3.5.
Okay, let's play best and worst case scenario, not with price, but with news. Right now as our kind of our final thing right here.
Holy cow.
So
I mean,
so what do you think is the best case scenario over the next, let's say, 2 weeks regarding tariffs, and what do you think is the worst case scenario as news coming out of the administration?
I think the best case scenario is that there are, and this isn't very much, by the way, but that there is a framework of negotiation with 1, 2, 3 major countries that begins to emerge: Mexico, Canada, and Japan. And that while we do not have a signed deal, the ideas of what that will encompass will be out there, and the market will begin to understand 2 things. Number one, that the net impact to tariffs is probably in the low double digits with those countries. And that number 2, and this has always been the case, everything that is happening has to do with China, 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 China. This is all about China. I don't think it's about anything else. I think it's all about China. That's the best case scenario. The worst case scenario is we just don't have that emerge, and he goes to 200% on China.
Right.
We're kind of at worst case scenario. Like,
We're kind of there right now.
The only thing that can happen from here, but let's actually play that out. That's a really interesting thought exercise, because the only thing that can happen from here is that he just reciprocals again. The only people that seem to be taking him up on his game of chicken are the Chinese, which is fine, because they realize this is all about them too. They're very adept at this game. So they realize that they're the ones. Everyone else is kind of being chill. It's like, I'm not going to go for, so you're going to get a little bit there, but I think you're getting negotiated. But you know what he wants? He wants to create barriers to China in Europe and Mexico and Canada, which, by the way, Europe would love, because their car business is getting destroyed by BYD.
Yeah.
He wants to remove the exit valve of Vietnam and Mexico, which are China-based. He wants to build up India as it's all China. Every one of them. Come on, we don't care about Brazil. We care about Europe, Mexico, Canada, a group of Southeast Asian companies and countries, and probably India, and obviously China. And he's just trying to. I will bet you that what we end up seeing, it's because it's all going to come down to 2 things. It's going to be the tariffs will be higher, and some of the barriers will come down, and those countries will increase their tariffs or their barriers and stickiness to China. It's all China, all of this, in my opinion. So,
it feels like, and this is really squishy, but in my mind, it feels like we are at a point where the headline risk is to the upside, at least in the short term. We could get some sort of, and you can tell just by the way the market reacted to the fake news yesterday that any type of positive headline is going to shoot us up like 5%.
Bessent, we were up today. We were up today because Bessent said there's clearly going to be negotiations. One other last thing I just want you to think about, is this VIX move and that move. Think of the bruise. I want you guys to think about a bruise. Imagine if you ever got a bruise in your thigh, like a really bad one, and you're healthy, but you know what? You're not running the next day after a bruise, right? You're gonna. It's gonna take you a week of kind of just being like, just working around with a lot of pain, and it's uncomfortable and all that. The market's been bruised. Give it time. But I struggle to see what news. Look, China's already done it. Where what's China? He throws another 50 on. China's going to do another 50. Well, I don't know. At this point, it's just funny money. It doesn't even really matter. But I don't see anyone else doing it. Europe's not doing it. Everyone else is going the other direction. So I think there could be some asymmetry there. I just think the biggest challenge is it might just take longer than people would like.
Yeah.
You know what I'm saying?
Yeah.
Like, I don't think we're going to have an actual deal. That's why I'm saying in 2 weeks, we maybe have frameworks of what deals can start to look like, but we don't have a deal for, 6 weeks, 8 weeks, 6 months, maybe. And that's the danger. That's the danger.
Yeah.
The actual deals could take 6 months.
Yeah.
And that's going to be a mini 2022, even though coming out of it, we may just V out of it like COVID too.
Yeah. Once the ink is dry, right? It's just
and go. Well, no, it wasn't even. No, remember COVID. Hold on 1 second though. We didn't V out of COVID because COVID was gone. We V'd out of COVID because we could see through to the other side. Once we realized we weren't going to lose 1 billion people to COVID, the kind of things settled down. And that's basically where we need to get to.
Yeah.
And unlimited liquidity from the Fed and all that, which is again these dynamics. But anyways, so folks, stay safe out there. Okay, think through what you're doing. I take the list that I just said. Take your world investments over here, trades. Get more liquid. Get more cash in your trades. Reset. Ignore your losses. Losses don't mean anything. They're gone. The market doesn't know how much you lost. Okay. No one cares except you, obviously. But, get to more cash. Even take a little bit of your trading portfolio and put it in the investing portfolio. Reset your brain, because if your brain is set correctly in this kind of market, you can crush it with these counter punches. Like, it's just, I've done it my whole life. So, clear your mind.
All right. That's a great place to end. Thanks for all the mindset stuff today, Enrique. I think that's really valuable. We got to get our heads right for this market right now. And we'll see how the bear is looking next week, next Tuesday, next top trade.
Who knows? So stay safe, everyone.
Yes, hang in there, and we'll see you next week.
Thanks.